So let's talk about the Central American economy, Patrick. What are your thoughts on that and how it differs from the US economy? Specifically, how does the financial services industry differ in, say, Central America versus the US?
Yeah, so really, I mean, it's a very different world. There's a lot less volatility in the market there, especially in the country I'm most experienced with, Belize. Um, Typically, the most high yield investment that you can get through any sort of bank or fund or any institution like that is a CD lock. So there's not very much potential for passive income through anything other than real estate. So, and I would say that the economy itself is less susceptible to outside economic forces. People typically don't buy things on debt. Nobody has mortgages. Nobody gets anything on debt, and that in many ways prevents quite a lot of the sudden collapses and stuff that we see here. Because if there's no problem with mortgage-backed securities, if there's no mortgages. So it is very stable there. It's very consistent. Um, and also overall the government is much smaller and is involved less and tends to be in better shape in terms of its decision making abilities. They tend to not be in as much debt there. And I know that some countries, especially El Salvador, for example, have moved and accepted Bitcoin as legal tender, which is really good news because it helps a lot for a lot of these people that work in other countries, but are citizens of El Salvador and want to send their money back. It means that they can easily transfer their money as long as they convert it into Bitcoin from the US to El Salvador with no fees, which is excellent.